It's official. This is the first time this cycle that Bitcoin is broken down from its 50-day moving average on the weekly. The last time that Bitcoin has closed below the 50-day moving average on a weekly candle close was in 2022, and this resulted in a drawdown of over 63% on Bitcoin. So does this spell the end of the bull market for Bitcoin? Is this going to be another nasty drawdown like we saw in 2022? Or is there a chance that we make a recovery? Well, in today's video, I'm going to be breaking down everything you need to know. We're going to talk about what has happened over the past few days that has materially changed the landscape for crypto. We're going to talk about why it's happening. Then I'm going to give you some context on the current move versus prior similar moves on Bitcoin. Then we're going to discuss the current macro situation, which is affecting markets. And finally, at the end of the video, we're going to talk about my personal plan. I've got a list of things that I have done over the past few days that I need to update you on. So if you enjoy content like this, where I keep you updated in a crazy crypto market, make sure to subscribe to the channel, turn on that post notification bell. We also have a very important video tomorrow with the traders where we are going to be going over the technical side of things. But let's begin here with some technical analysis. I'm going to give you a full run through of where the market currently sits. Just a reminder before we get into things that nothing in this video is financial advice. This is my opinion only and is for entertainment purposes only. The full disclaimer is in front of you and also in the description if you would like to check it out. So looking at Bitcoin here, it's the first time, as I mentioned in the introduction, that we have broken down and closed a weekly candle this cycle. Now, the last time we did this was in 2022, where we saw a big drawdown. In previous instances of breaking below the 50-day moving average on the weekly, we have ended up reclaiming a few weeks after. And in this period here in 2018 to 2019, it did take a bit longer, but it wasn't as deep of a drawdown. We did end up recovering. But obviously, the last time it happened, it was quite a steep drawdown. So I think a lot of people have been paying attention to this indicator because it has been, I guess, the North Star in terms of the cycle. Because, I mean, fair enough, it was in 2021. You could see here, even in that mid-year lull, we maintained above that level and it acted as confirmation for the eventual bear market. And then so far this cycle, it's also acted as major support on the way up. However, one thing I want to point out is, as you can see here on the weekly and more importantly on the monthly and even higher time frame, we do have major support here on the horizontal. So this is, I would say, like a last level of support for Bitcoin. Despite the trend clearly breaking down and despite the trend clearly being exhausted, there is support here and we already have started to see a reaction. You could see the dark part of this red rectangle represents the monthly, where we have a clear support currently. You can see multiple monthly closes and opens from December, January pre-Trump's inauguration, the retest in May, and now we're coming back down to test this level. After this level, you could argue where the next support is, but it's probably going to be in the high 70s, low 80s. I'm going to talk later in the video about whether I think we end up getting there, but I just want to make you aware of the fact that technically we are heading into horizontal support now, even though clearly the trend has collapsed. And we're going to talk about later in the video the reasons for why the trend has collapsed, and then we're also going to talk about the reasons why the trend could be reinstated, because I think it's important to look at both sides of the market, both bull and bear. Fear and greed is clearly ticking into the bearish territory now with extreme fear at 11. This is the most fear we've seen this cycle. It's pretty much full capitulation. As Fred Krueger said, there's complete and utter panic selling happening. In a minute, we're going to look at the exact reasons why there's panic selling happening. But we have been seeing big OG whales starting to sell Bitcoin, which has clearly led to capitulation across the market in tandem with a variety of other factors. Another thing that a lot of people are starting to point out is the fact that we are now getting a death cross. As you can see, this is the first death cross that we have had since April earlier this year during the tariff scare, and then before that in 2024 and 2023. People are scared about the death cross because it typically does lead to downside in the day, 2 days, 3 days, and 4 days following the death cross. However, I think it's important to note that actually in the weeks and especially the months coming out of a death cross, historically we have ended up higher and it has actually marked a local bottom from a macro perspective for Bitcoin many times. So you can see the 3-month average return for death crosses dating back to 2014 is actually 26%. And the last 3 death crosses have resulted in 36% rebounds, 25% rebounds, and 60% rebounds. So despite the fact that we have seen severe drawdowns every time we break down from the 50-day moving average, we also have the counterpoint that if you have the 50-day moving average combined with the 200 forming a death cross, you often actually see rebounds happening out of that event because it typically marks local bottoms. So although this could lead to a little bit of immediate pain, if you want to take this data into account, it could lead to longer term gain, as it's often a sign that the market is oversold. And you can also see on the fear and greed index, we are starting to head into oversold territory, in my opinion. And if you look at the stochastic RSI here, we are definitely starting to head into oversold territory. Now, this doesn't mean that, we have to rebound because, in bear markets, and you can see this in 2022, there are periods where you will oscillate in this lower quadrant here for, a matter of weeks or months, and price can keep bleeding. As you can see, this is a downtrend despite RSI staying at relatively suppressed levels. So it doesn't necessarily have to be a bottom indicator, but what it does suggest is that you are at least buying in the bottom quadrant of the fear and greed cycle. And typically, buys in these areas do end up representing over a macro time frame. So I'm not saying the market has to bounce tomorrow, but over a macro time frame, decent chances to enter. And we've seen this time and time again. If you want to start lining up the bottoms where we have been oversold with the chart, you can see this does become quite evident. And, even earlier in the year, in April, this ended up marking a bottom as well. And you can go back and do the same thing throughout the past. So on Bitcoin especially, and obviously for alts, it's a different story. We'll talk about alts later in the video. Oversold periods typically do lead to opportunities. And that's why, spoiler alert, I'll get into this later in the video. I have been deploying cash into Bitcoin and one of the Bitcoin proxies that I think is high upside. But what's really interesting about the market right now? We are actually seeing alts hold up okay. Now, I'm not saying my altcoin portfolio looks amazing, nor does yours probably look amazing unless you're like full port Zcash, but it definitely looks better than it could compared to other times we've seen mass capitulation on Bitcoin, because dominance right now is starting to form an interesting trend. So it has been rallying, but we're actually seeing the breakdown on dominance. And I think this is quite significant. It's something I want to speak about because you can see the noodle here, right? Dominance was rejecting into the money noodle, which is the moving average that we use in the Mars High Club. It's tracking similarly to the 100-day moving average. You can see that we rejected, and every time we pushed up into it, we would basically end up coming back down and making a lower low. So this was a bearish structure for dominance, which saw altcoins performing well relative to Bitcoin. What happened is Bitcoin ended up flipping and holding this oscillator, and it was moving up and up and up and grinding towards range high. But recently, something has flipped. Bitcoin is actually starting to confirm bearish on the dominance chart right now, and this to me looks like it wants to come lower. Now, okay, it hasn't been a weekly close yet, so if you go into the weekly, technically, we could end up, closing this candle positive for the week. If that happens, I would anticipate dominance heads higher, and I would, want to be long Bitcoin over altcoins. But the overall trend here looks quite bearish for dominance, and just based on the current information, and this can change obviously if we saw a positive weekly close, but looking at it today, and I'll keep you updated throughout the week, it looks like we want to head back down towards this range low, and then whether dominance makes a lower low or makes a higher low is yet to be seen, and that could trigger the next leg for the market. But this is quite interesting because what I think has happened, and this is kind of my thesis on the market overall right now, I think October 10th caused a lot of damage for the altcoin market. I think there were a lot of traders who got wrecked. A lot, pretty much anyone holding big leverage altcoin positions got wrecked, and that caused a lot of retail to exit the market. But that meant that a lot of the weak hands, a lot of the potential sellers, and a lot of the shorters that were in open short positions got flushed out of the market. And what you've seen since then is that we've had suppressed volume profiles across the altcoin market, lack of volatility and lack of liquidity. So altcoins actually front ran through a forced event, 10-10, the Bitcoin sell-off. Now we're seeing the Bitcoin sell-off, which in my opinion is front-running the equity sell-off. There's been a lot of projections, which we'll dive into in today's video, about potential equities weakness heading into the beginning of next year. We're seeing, Google searches for AI bubble being at all-time highs. That is a big narrative at the moment, and Bitcoin is front-running that. And because Bitcoin is like a levered tech stock, it often sells off more aggressively, and prior to, the actual tech index is selling off. And now we're going to start seeing, as we have already begun to see, the tech indexes selling off. We've started to see the beginning of that now. So basically what's happened is altcoins sold off first, then Bitcoin sold off, and then equities should sell off. And Crypto is basically front running this, which is why you're seeing now Bitcoin dropping, but alts aren't really reflexively going to the downside because the majority of their sell-offs have already occurred. This is actually a positive sign for alts. I'm not saying go all into alts or ape alts. I still think you want to move up the risk curve once the market bottoms, because the bottoming process does take some time. But I feel like what's happened is we've seen this front running effect, which is now resulting in alts actually hold up decently versus Bitcoin. I think what also is happening, and this is just my take on the cycle, you can have your own opinion, but in my opinion, we have actually already topped for the cycle. Now, you might be thinking, okay, Miles, you're contradicting yourself based on what you said last video, because in the last video, you said from a macro point of view, you don't think the top is in. And both things can actually be true. We have topped for the mini cycle. What does that mean? The mini cycle of DATS buying, the mini cycle of the strategic Bitcoin reserve, the mini cycle of ETF flows was what was driving Bitcoin up. But now that narrative is exhausted and you're starting to see it unwind. From a macro perspective, as we're going to speak about later in the video, there are still lots of reasons to assume that more liquidity is going to be coming into the global economy over the next 12 to 24 months. That should be a trigger for the next cycle for Bitcoin. I think it's time to move away from the 4-year cycle thesis. Now, I know technically it's not proven wrong until we have a big rally next year and we start to, shrug off the trends that we have seen in the past from the 4-year cycle. So the 4-year cycles haven't really been proven wrong yet, but I think they're about to be next year. And I think this will mark, for a lot of people, the end of the 4-year cycle thinking. And if you've been watching the channel, I've already kind of eradicated this thinking from my mindset because it's abundantly clear now that Bitcoin is treated as a macro asset. So treated, and we're seeing this now with its deleveraging, as an extended version of the NASDAQ. So I think what happens is Bitcoin resets for a bit now. It forms its bottom, and we'll talk about how low it can go, but it ends up forming its bottom, which is its base. So one mini cycle's over, it forms its base and gets ready for the new cycle, which is likely going to be in 2026. Bitcoin, like altcoins, doesn't have to stick to a halving cycle anymore. It's purely dependent on flows. And those flows are being driven from the macro environment, and the macro environment is driven by liquidity. So when people say like, oh, the top is in or the cycle's over, that doesn't actually mean what it used to, in my opinion. Because yeah, you can make the argument that the top is in the short term, in terms of the DAT mini cycle, but in terms of the broader macro cycle, I don't think the top is in. And if you're a long-term investor, which I am, well, I actually want to use these as opportunities to accumulate. And we'll go through later in the video exactly how I'm doing that. So now I want to look into why this weakness is happening, because I think in order to understand what to do next, you need to understand what is triggering the weakness. As Smiley points out here, as I just mentioned, there is some evidence to suggest that crypto is now front-running equities. As Smiley says, let's be real, Nvidia's up 20x from recent bear lows, and don't even look at Palantir. Wouldn't be shocking to see a broader correction in 2026. And I think traders are smart. After equities have run up so much, they understand that they need to take profits. So the Bitcoin holders understand that this is going to be happening across equities, maybe for the next couple of months. There's also rate cut uncertainty, which is starting to come into the market. So Bitcoin is deleveraging ahead of equities, which are deleveraging ahead of potential weakness. And the irony is, I think this actually ends up forming a local bottom sometime this quarter for equities before maybe it rallies next year, because this is now starting to be forecast. And a lot of that will depend on what happens with the rate cuts, which we'll discuss in a minute here. Another thing which is suppressing equities right now and thus has caused this Bitcoin sell-off is the global liquidity changes being quite muted. You can actually see here that the global liquidity metric has shifted into a risk-off regime. So when you have global liquidity contracting, risk assets, or at least not expanding aggressively, in an environment like this, risk assets will perform poorly in the short term until liquidity momentum picks up again. There is evidence to suggest, however, we will see liquidity starting to pick up again in the very near future. But remember, we just had the government shutdown, which stopped a lot of federal spending and stopped a lot of the data that we needed to get that spending. So that has caused this muted volatility in terms of the weekly change in global liquidity, which is clearly impacting asset prices and will likely continue to impact asset prices in the short term until we see a shift in that regime. You can also see this on the Fed Reserve. The balance sheet has been draining instead of expanding like it was, because we had quantitative tightening. Now that tightening is ending in December, and it doesn't mean that easing is baked in, but at least we will see this balance sheet beginning to stabilize. This is also caused a bit of a drag on liquidity. And we know that Bitcoin is extremely sensitive to global liquidity. The other thing that is affecting the market right now and causing structural weakness across risk assets in general is the rate cut decision. I mean, just a couple of months ago, it was pretty much baked in, at least above 75%, that we were going to get a rate cut in the December meeting. Now, the market is anticipating that balance of probabilities, we don't get a rate cut in the December meeting. In fact, the probability is 53.6% that we don't. Pretty much neck and neck. And what this suggests to me is that if we did get a rate cut, risk assets would fly. If we don't get a rate cut, I think risk assets would perform poorly, but I think a lot of the risk is being priced in prior to the event. Because even just a slither of uncertainty causes investors and traders who are significantly up, whales who are significantly up on Bitcoin, and people who are significantly up on equities to take profits ahead of an uncertain event. Because if there isn't a rate cut, they want to protect their profits. So it makes sense that a lot of this is priced in ahead of time. And I would even say because of this psychological effect of the fact markets have run up so much and people are feeling a little bit iffy, you probably see more than 50% chance being baked into consumer behavior and investor behavior in terms of markets. So that means that this could actually skew positive EV towards the rate cut event. And if we do get a rate cut, clearly that would skew, massively positive EV, and you'd probably see big rallies across the market. So this next 3 weeks is going to be a bit of a waiting game until we get a decision. It's on December 10th, so keep your eye out. Another reason, because we're painting the full picture here, why Bitcoin has been weak is because of the DAT narrative being exhausted. I've discussed this in the past couple of shows, so I won't go into too much depth, but you have seen MicroStrategy selling off. A lot of the other crypto equities have been selling off. I'm actually buying some strategy, not financial advice. You've got to do your own research on this, but I'm interested in it because I think it offers a bit of a reflexive play versus Bitcoin. But on a side note, but this has also been one of the drivers why the market has been selling off. And obviously there's been lots of speculation as to whether Saylor is selling. That's not the case. In fact, Bitcoin could drop 70% and he still won't have to sell. It's a matter of years until he owes his creditors money. So that isn't necessarily a tail risk in the short term, but of course it is one for the market longer term. And a lot of the excitement about them acquiring a lot of Bitcoin has now turned into panic in many cases, and we've seen some material selling from some of the smaller DATs. We can't talk about reasons why the crypto market is selling off without looking at the whale behavior, who have clearly spiked in terms of their selling. But interestingly, over the past 24 hours, this has started to shift. So we've seen heavy selling over the past few weeks, but we have started to see whales actually accumulating again. This is starting to tick positive. So this might be a sign that you could start to see a bit of a recovery. Let's see. But that is something that you should definitely keep monitoring. I'm doing so on Glassnode. A few other reasons we'll run through quickly why the markets are looking weak. Japan is starting to shake the market a bit with their 10-year government yields surging. This is off the back of a stimulus package, short-term pain, and potentially a risk factor, but potentially long-term gain in terms of liquidity, considering it's a huge stimulus package. In a minute, we're going to run through all of the stimulus packages that we are about to see in markets. That underpins my macro thesis in terms of, asset expansion across the board next year. And I think the final reason why the market is a little bit shaky right now is because of the talks of an AI bubble. So I think there's this narrative going around, and we've seen Peter Thiel actually selling his Nvidia shares and his Tesla shares. We've seen SoftBank selling their Nvidia. Michael Burry has obviously been shorting Nvidia and Palantir, and we've seen Google searches for AI bubbles skyrocketing to a new all-time high. It seems to be that the narrative in the market right now has shifted from, a greedy stance to a very fearful stance. And when retail starts searching AI bubble, it does make you think maybe that narrative is starting to get a little bit saturated and we could be closer to a bottom than people think. And there's actually data to back this up. People called the .com bubble a bubble in its 40th month. They called US housing a bubble. They called gold a bubble. The Great Depression was obviously a bubble before it popped, but these things actually usually take a little bit longer. And I thought this graph was great because this actually shows you the time it takes for most bubbles to develop and when they end up bursting. And the NASDAQ, which is, I guess, representative of AI, tracked against a lot of these, shows that, yes, it's on the way to becoming a bubble, but perhaps in terms of time, we aren't quite there yet. And as I said, usually bubbles don't pop when retail is now Google searching it. Usually bubbles only pop when no one's expecting it. That's what happened in the Great Depression. That's what happened in the dot-com bubble when everyone was bullish. That's what happened, of course, in the housing crisis in the global, which led to the global financial crisis in 2008. Nobody, well, apart from Michael Burry, I guess, was expecting it. People weren't expecting it. And that's what ended up creating the popping of the bubble. So I don't know if the bubble's going to pop when Google searches look like this. It actually makes me think that potentially this is a temporary fear event, which could be a kind of buy the rumor opportunity. And you can see Warren Buffett is doing the same thing. He is actually buying more shares of Google, who are obviously big players in AI through Gemini. He bought 4.3 billion and 17.8 million shares. He's been heavy in cash and he started to buy into the fear. And obviously others like Peter Thiel are taking the opposite side of the bet. So you got to work out what side you're on. I'm on the side, and I'll explain to you why now, that we still could see some upside in markets, or some aggressive upside in markets over the next 12 to 24 months, which make this current Bitcoin dip, I think, look like a small thing in the scheme of things. Just to give you some context on drawdowns as well, Bitcoin does have these drawdowns, and it's quite routine for Bitcoin to have these drawdowns, even in an uptrend. I think the only differentiating factor here is the fact that we broke down past the 50-day moving average. But if you exclude that, and we already touched on that earlier in the video, you can see that, okay, this is a 27% drawdown, but earlier in the cycle, we had a 30% drawdown. Earlier in the cycle, we had a 32% drawdown. In the cycle in 2021, we had a 53% drawdown. So we've had these big Bitcoin drawdowns on the way up. I don't think, as I mentioned before, this is going to be a 4-year bear market or a 3-year bear market. I think when people talk about the cycle being over, you have to reframe your thinking to mini cycles, because Bitcoin is a macro asset now, and it's going to be driven by liquidity. So going into the liquidity discussion today, there's a few things that you have to be aware of. And that is, firstly, the US is preparing stimulus checks. It might not be actual dollars being handed out to people, but it could be tax breaks, which are obviously a form of stimulus as well. We're also seeing, obviously, the government become active again, which is going to lead to some spending. And we're also seeing QT ending. Japan's obviously preparing their 110 billion stimulus package. Something I don't see a lot of talk about, but it's one of the biggest packages of all time, is China with their 1.4 trillion stimulus package. We discussed in the last video, but something I'll reiterate again today, the AI race. There is definitely an AI energy arms race right now between America and China. We are seeing China taking the path, and I think this is the path the US will take, of spending more money in order to fund this, instead of, contracting, which might be the fiscally responsive thing to do, but then risking falling behind or, degrading your lead. The US doesn't have a lead. China has twice the energy production, so it actually needs to spend more to create more energy. It's hard to see that in a tightening environment, and that's obviously one of the reasons why Trump has been, pushing the Fed towards, continuing to cut rates and maintaining loose policy. So I don't think the goals of the US economy or the goals of the China economy necessarily align with going into a big tightening cycle here. We're in a very unique situation, which I don't think you can compare to past cycles, and that's why I'm not comparing Bitcoin to past cycles either. 4, the Fed is officially ending QT, as we discussed. 5, the US is issuing a $1.9 trillion treasury per year. 6, Canada is restarting its QE program, so they're kind of front-running some other nations, and you're going to see this narrative as well for other countries across the world, but not the US just yet. 7, M2 money supply is continuing to hit records, and this is whilst we've seen the Fed tightening its balance sheet and the government shutdown, so this should only go higher and higher and higher. And then 8, global rate cuts are at 320 plus over the last 24 months. So there is more liquidity in the system than there was in 2022, but I think this is only set to expand with this stuff. So, Kabisi talks about inflation. Definitely, inflation will become a thing here, but how else do you win this race? You kind of have to inflate the currency, and that's where the narrative for Bitcoin comes in. That's where the narrative for, of course, gold comes in as well. I think Bitcoin and gold are 2 assets that will do extremely well, as they are debasement trade assets. And if governments are going to continue to debase their own currencies, you need hedges against that. Obviously, people achieve that through risk assets, but gold and Bitcoin fit in their own unique ways. Gold obviously being a lot safer, your classic inflation hedge, flight to safety asset. Bitcoin less of a flight to safety asset, but more of an extended risk asset. Overall, I think the business cycle for equities isn't done. As I mentioned before, I think we have potentially a couple of months of pain, but I think Bitcoin has already front-run the majority of that. And then as an extension of that, I think altcoins were forced to front-run that through the 10/10 liquidation event. So now let's wrap up the video by talking about my plan. What are some of the moves I am making? Once again, not financial advice. These are just things that I've been doing with my portfolio. So first update, by the end of the week, I will have DCA'd 10% of my cash. I was 50% cash. I'll be around 40% cash because I've been taking some Bitcoin positions, started at 94K, made some buys at 89K, making some more today at 90, been DCAing into MicroStrategy at 195. This is a more reflexive play on Bitcoin, so keep in mind it's probably not as safe as Bitcoin. Over a 5-year period, I think Bitcoin is a safer bet because there is no tail risk. If MicroStrategy needs to start repaying loans, it can't go under MNAV because, one Bitcoin is one Bitcoin. But in the shorter term, I want to have some exposure to strategy. And by shorter term, I mean like a year, because it allows me to essentially get leveraged Bitcoin without having to take on leverage. So it's the closest thing that I can get to like a leveraged reflexive Bitcoin play without actually going like 2x or 3x long on Bitcoin. So if you're bullish on one more Bitcoin leg this cycle, strategy can make sense to have some weighting in your portfolio. But obviously, then it has a different place in my portfolio because most of my Bitcoin is long-term, whereas strategy, I'll look at some point to shift out of strategy back into Bitcoin when I think the market's getting toppy. And then you can kind of run the opposite play. You can shift Bitcoin into strategy when the market is low to continue to build your Bitcoin stack. So that's just strategically the way I'm playing it. The other thing you can consider is Bitcoin options. But for my portfolio, strategy made sense and it's an easier position for me to manage. Going on to the next point, I'm starting lower on the risk curve. So Bitcoin, strategy, the safe stuff, maybe a couple of alts, but I haven't added anything there yet. Then I'm going to move up the risk curve once markets start to recover. The fact that dominance is coming down is a good sign, but I want to see signs that Bitcoin has put in a bottom, and this can take a little bit to form. It could take a few weeks. It could take a month. I don't really want to pick a bottom. I would rather things consolidate, and then I could go more aggressive and go more risk on as time goes on. I'm fine to do that, but I am open to taking altcoin positions when I like them. For example, I added my second DCA into Zcash over the weekend. Privacy for me is a big focus. I got a video on this coming out soon. I had a really good trade on it the other day. You probably saw in the live stream, 100% profit in a day. And I rolled some of that into a spot position and added a little bit more to my spot position today after we've seen a bit of a drawdown. So that started to cool off. I think that's more of a longer term position for me, and I'll explain that in a future video. The other thing I've started to do, once again, not financial advice, is DCAing into Chinese equities. I like the outlook, even though there are risks that aren't present in US stocks. I like the outlook in terms of being able to outperform US equities over the next few years. So for me, this is a very long-term position. But once again, I'm starting low on the risk curve, and then I will move up as we start to form a bottom across markets. But I don't think there's proof of that yet. Thus, I'm DCAing into things that are a little bit safer for now than going into low cap altcoins and all that kind of stuff, which is, of course, is going to factor in the right time. And the last thing, and I think this is really important, is staying curious every day. Like, this isn't a market where I've been like checked out and just DCAing stuff and chilling. Of course, you can do that if you're emotional. That's totally fine. But I'm staying curious. I'm researching stuff. I'm looking into new narratives. We discussed some stuff on the Q&A yesterday. I am constantly looking at new ways to get exposure to new tech. I'm looking into AI, X402. I'm looking into privacy. And I'm just continuing to learn every day. This is what I did throughout the bear market. And it's why when the bull market came along, I was able to ride some crazy positions. I went deep into RWA in 2023, made I think 10 to 12x on ONDO. I went deep into some of the community coins in 2023, famously bought PEPE. That led to a 100x during the next year. All these coins that I researched in these slow periods ended up, paying dividends come the next run. So if you believe there's going to be another run, now's actually the time to research and start planting the seeds. Planting the seeds doesn't necessarily, mean allocating aggressively. It just means coming up with ideas and, maybe slowly DCAing so you are prepared into quality assets. Staying curious is the number one thing you need to do during these times. I actually have something that is probably going to really interest you. I've got a video on ICOs coming soon. This is a way that you can get exposure to a lot of the newer coins that are launching, because obviously like the airdrop stuff has started to die off a little bit. I think that meta is coming to an end, although there's still opportunities across the PEPE dexes, of course, but it's moving into more of an ICO market. Obviously, the Trump regulatory environment has opened up the door for ICOs again. And there are many platforms where you're seeing multiples on launch across Legion, across Echo. So not a lot of you are participating or trying to participate. This is somewhere that you can get a huge edge. So I've got a thread and a video coming out very, very soon And these new projects are how you can still make money in a down or sideways market. And if you're able to get into these launches, because they're launching low, if the market improves, you can make huge multiples on them. So that's a big focus on mine. And, I might not be stacking, dollars right now, but I am at least stacking things that I think are going to end up paying dividends when the market, returns. So you can actually make more money if you plant the seeds now. So that's going to be a focus of mine, because on this channel, I want to teach you to make money even during these periods. I'm not one of these guys like a lot of other YouTubers who are just going to go quiet now and be like, just, do nothing, because I don't believe in that. I don't believe doing nothing is the way to go. In fact, I think there's better risk reward to the upside on being extremely active right now. So getting into ICOs, is one way that you can do that. And we're going to discuss that in a future video. So hopefully you enjoyed the update today. I've got a video or a stream coming tomorrow with Paradise and Morin for our normal Wednesday slot, where we're going to be going through the trading side of the market. So, you've kind of heard my fundamental long-term take today. Going to be great to get more of a granular view on the market to see how we can maneuver in the shorter term. I always really enjoy having a session with them. So notification bell on, and we'll see you tomorrow. Keeping you up to date as always. Hopefully you enjoyed the video. Have a lovely rest of your day. Peace out.